Hey, good morning. Welcome to the morning brief. Today is Wednesday, August 20th. So we're midweek. What's going on? Looking at forexfactory.com calendar for the US, we have crude oil inventories at 10:30 a.m. 11 a.m. we have FOMC member Waller speaking. At 2 p.m. we have the FOMC meeting minutes. And at 3 p.m. FOMC member Bostic speaks. So we can see this is a red item. FOMC meeting minutes. This will give us additional details from the last meeting, which may shed light on future action. So that's why we're particularly interested in it. And at 2 o'clock, the market will definitely spike in a direction, unless the meeting minutes were super benign and did not add any kind of outside information. So there you have it. So everybody will be kind of on pins and needles until 2 o'clock. It would be very interesting to see if this actually shows us any additional information that might be useful for predicting interest rates. I doubt it, but it is what it is. Moving on. Looking at the daily chart, you can see the daily chart. We've had a couple of down days. Big down day yesterday. We're gapping down again today. Overnight, we touched the 20-day moving average. So that's kind of interesting. We touched it and bounced off of it. Also, you can see I have a Fibonacci drawn here. We came very close to the 38.2. Now, most trends, a pullback to the 38.2 Fibonacci is very common and necessary, actually. When we start worrying about the trend is when it breaks the 50. Anytime it breaks the 50% retracement, we start worrying about the trend. That being said, we're not anywhere near the 50% retracement. And it would be very common to see this bounce and continue to rotate back to the upside. Whether it does or not, who knows? Obviously, there is support right there at the 38.2, which is 64.05, the 20 period moving average. We are still currently above all of the moving averages. Therefore, we are bullish, still bullish. Yeah, we continue to have additional, what's the word I want? Additional, I cannot give it me a paste. Roll V. There we go. We're getting wicks, getting these decent sized wicks. Anytime we see these at tops, it's very concerning to me that we're seeing price rejection. Price rejection eventually leads to change in direction. Volume was up more than the previous day, but still below average. So volume still not, even on a big down day, volume is not particularly good, is what it is. Moving on, looking at the 60-minute here for inventory. Price action down, we saw that, and we have a positive inventory. So we still have buy the dip folks coming in and buying. That's particularly once we got down to this bottoming area, you can see it. They started buying around 1 o'clock. They just started buying it, supporting it. So there you have it. The buy the dip folks are still doing what they do. We've talked about this quite often. Looking at the overnight action, approximately 27 points, slightly above average. Nothing to worry about there volatility-wise. Where do we have support and resistance? So we squashed this down a bit. Resistance on the top side, 64.35, 64.47, 64.60. Support on the other side, on the bottom side, 64.07. Obviously, we have that Fibonacci level that's at 64.05-ish. 6400, everybody's watching that. We break below that. It's a psychological level. Could get ugly. 63.85, 63.80. We break below that. 63.60, 63.50. Those are going to be spots where we should see some buying come in. Stock Trader's Almanac for today is 47.6. 47.6. So a negative bias today from the historical data from the Stock Trader's Almanac. Hope you have a great day. See you tomorrow. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com.